Welcome back to Closing Bell on the 3rd of December 2020 on a Thursday. So much to cover today, so stick with me on this one. The first one I want to speak about is Moderna Stock. Moderna has gone up 10% today and Pfizer has gone down. Reason? Because Pfizer has promised the shipment they're not going to make it. They only can ship half by the end of the year. Moderna is taking advantage of that, is shooting up and 10%. And if you follow me on my channel, back around in May 2020, I posted this video saying Moderna will hit $400. Okay, so back then Moderna was about $80. Now Moderna is on the momentum, 150. Potentially it could hit 200 by Q1. And in my video previously, I claimed that by Q2 2021, which is not far away, it's 6 months away, they might hit $400 stock, providing on the condition there's no mutation, they deliver on time, they go 1 billion revenue. So with UK, US, European countries like Germany, France are all buying up, and UK is the first one that's actually sanctioned this to be shot by in the next couple of weeks. It could be next week that we can see Moderna vaccine shots in our body, but not us obviously. It's only for the more vulnerable people. And potentially now I can see potentially we could hit 400. Have I invested? No, I don't invest in biotech. I may consider my own thesis. Sometimes I do my own research independently, and I might even look closely that Moderna may be on a good momentum, but also short sellers are at the gates just now. Okay, second one that I want to speak about is mining stocks. Chinese, Japan, and Korea are back on the manufacturing production. They've beaten COVID, they're on production, and there's a huge shortage of copper, shortage of titanium, shortage of raw materials just now. So I looked into the mining companies like Rio Tinto, Glencore, American AAL, American Anglo mining companies, BHP. They all have recovered really swiftly in the last 2 weeks. In fact, they recovered so well, they actually beat the last all-time high. These companies, some of them are still paying dividends. Mining stocks is a bit too late to get in. There are many people already plowed their money in, especially those dividend investors, so it's too late to get in. But 2021 might be the year for mining stocks to go even all-time high, simply because manufacturing companies are catching up on their business, which have lagged behind in 2020. There's a huge shortage of backlog of agenda item, ships, cars, batteries, plant manufacturing materials. They're all in shortage, and these are on a backlog in China, and they will be catching up soon. Third thing I want to speak about, just to follow up on the second point, is if you see the FTSE and the CAC 40, the French index, are slowly catching up. They are slowly catching up to the previous high of back when they were in February. But the likes of Nikkei has hit all-time high. I just realized it today. And DAX 40, the German index, are already recovered, close to recovery to the last February. So they're not far behind. COVID cases might be rising, but investors are actually putting money, betting for a swift recovery for Q1, Q2. So the forecast for the next 6 to 9 months has already been placed in. And the next one I want to cover is the oil stocks. Okay, so OPEC Plus will have a meeting and they want to start increasing their production. 500,000 barrels per day, get on slowly, let's all ramp up. So if you start flooding more oil, people think that oil price will come down. I don't think so. Now, if they're doing it because the peak demand of oil is starting to come back. I went and dropped my daughter off dance, and the amount of cars in Christmas time, I thought everybody was working from home, but it's, there's no shopping in town, but people are starting to drive, people are starting to travel again. So the demand is starting to pick up. So if demands of oil starts to pick up, the production increases, all it says is oil company stock price may go up. For me, I'll stick to my TCs. If I were to invest in oil, it's only Chevron and Total. But if you look closely, Chevron, Total, BP, Shell, the recovery rate from now, if oil hits 55, we're talking about 25-30% recovery, and if they pay dividend, fine, it's a bit of bonus at the side. But I am looking at hyper-growth type growth, not hyper-growth companies, but high-growth. So like the likes of PMO, Tullow Oil, Rose Energy, all these sub-tier companies that's just focusing on oil. Why? Because these guys, when oil hits high, they make profit because the cost of oil lifting up to the ground, such a small company, their cost for producing this oil is low. So they will be focused on trying to get new wells, new platforms up and running. When we head in 2021, they're going to start sanctioning projects again. So that's why if I were to be betting oil, I will only put in PMO. And yes, I do put money in premium oil. I actually still believe that there's a potential 2x, 3x, 4x in there. So I've put a bet just now. And slowly, if I do see momentum, I will buy momentum and increase my stake on premium oil. Because I see that because of the merger with Chryso, which will make it even bigger. Okay, finally, since the index has recovered, the mining has recovered, the oil is coming to recovery, vaccine is recovering, all the stocks are recovered. So what else is there to buy then? Yes, I can say it is called the B.E.A.C.H stock. B.E.A.C.H. You all know about the FANG stocks. You all know about hypergrowth stock. But how about the B.E.A.C.H stock? Do you know the B.E.A.C.H stock? No, let me explain to you. So the B.E.A.C.H stock stands for, I'm not joking, there's such thing called the B.E.A.C.H stock. It stands for B for beverage, E for entertainment, A for airlines, C for casino, and H for hotel. So it's basically the entertainment industry, those that the industry has been hit the most. So these are the stocks that are still injured. They have not recovered as much, but then they might come back. So they're very high risk. Most of the companies like Hertz, lots of shopping, lots of casino, lots of food malls are all bankrupt. Shopping malls are all bankrupt. So it's only the remaining or the last man standing with not too much debt, manageable debt for the next few years. They're not going to catch up to the growth they were back 6 months ago, but they might catch up in the next few years. So be careful what you bet. So those are the only companies that is possibly an area that you want to invest in. But again, be careful of where you are. If you're one of those value investors, this will be the areas to look for. I mean, for me, if you ask Alex, what would you invest? I would only invest in online gambling like DraftKings or Flutter Entertainment, or I would invest in Boeing, who's done really well today, which is part of the airline. I'm not going to be going to cruises. It's just casino and Boeing really. And in terms of entertainment, hotel and beverages, hotel maybe Airbnb. I may look at Airbnb closely when it go IPO. I think very soon, because I'm an Airbnb user. I'm also an Airbnb host myself. So Airbnb is something that I might look, but I want to see the valuation when it come out. I'm not going to jump on the bandwagon. I'm going to see the valuation, and I might produce my thesis and show to you guys. So this is me really quickly recapping 5 key areas. And I hope you enjoy this, and please do click the like and subscribe, and also the notification button. That's where I post things during the day when I've got an idea to share with everyone. So I'll see you tomorrow on Friday evening on the closing bell, and I'm sure I'll turn up this time because I did not turn on last week because I was busy setting up a Christmas tree. But this week, tomorrow, I will turn up. So see you guys tomorrow, and have a good evening.